Welcome to my channel CA Gayatris Academy, and today we are going to cover CARO 2020. What is CARO? CARO is Companies Auditors Report Order. It is issued by the Ministry of Corporate Affairs under Section 143, subsection 11 of the Companies Act 2013. What is the purpose? CARO requires auditors to report on specific matters relating to the company's financial and operational aspects. Think of it in this way. Normal audit report, overall opinion, CARO, detailed checklist of important areas. Applicability of CARO. CARO applies to most companies except certain exemptions. CARO does not apply to banking companies, insurance companies, companies registered under Section 8 of the Companies Act 2013, one-person company, that is OPC, small companies, and private companies which are meeting conditions like paid up capital plus reserve less than equal to 1 crore rupees, borrowings less than equal to 1 crore rupees, revenue less than equal to 10 crores. Okay. Always check the applicability first in case of case study questions. What is the structure of CARO 2020? CARO 2020 contains 21 clauses, but for our memory, we will divide them into 6 logical groups. Group 1, access-related clauses. Clause 3, subclause 1, property, plant and equipment. What is the work of the auditor? Auditor must report proper records, maintain physical verification done, title deeds in company name, revaluation done, benami property held. Example, if land is in director's name instead of company, auditor must report under CARO. Benami property reference, Benami transactions, Prohibition Act 1988. Then clause 3, subclause 2, inventory. Auditor reports physical verification conducted, any 10% or more discrepancies, working capital limits from banks secured by inventory. Example, stock as per books is 10 crores, stock verified 8.5 crores. Differences greater than 10% report under CARO. Group 2, loans and investments. Clause 3, subclause 3. Loans to subsidiaries, associates, LLPs, other parties. Auditor checks terms prejudicial, repayment regular or not, overdue loans are there or not. Example, company gives loan to director's relative without repayment schedule, report under CARO. Clause 3, subclause 4, companies with Section 185 of the Companies Act 2013, loan to directors. Section 186 of the Companies Act 2013, loans, guarantees, investments, limits. Now we have Group 3, deposits and public money. Clause 3, subclause 5. Auditor checks compliance with deposit provisions under Section 73 to 76 of Companies Act 2013. Example, company takes deposits from public without compliance. Report under CARO. Then we have Group 4, statutory compliance under Clause 3, subclause 7. Very important. Auditor reports whether company is regular in depositing statutory dues or not. Examples, GST, PF, ESI, income tax, customs duty. If dues outstanding is greater than 6 months, for more than 6 months, auditor must disclose. Third example, income tax department. Okay. Group 5, fraud and financial issues. Clause 3, subclause 11, fraud reporting. Auditor must report fraud by company, fraud on company. Okay, whistleblower complaints, relevant standard 240, SC 240 also works here. Example, employee shipments rupees 20 lakhs, auditor reports under CARO. Clause 3, subclause 9, default in borrowings. What does the auditor reports here? He reports defaulted repayment of loans, willful defaulter status, funds used for unintended purposes. Example, loans taken for factory but used for real estate speculations. Group 6, other important clauses. Clause 3, 12. For Nidhi companies, example, Nidhi companies, what does auditor check? Auditor checks net own funds ratio, compliance with deposit rules. Clause 3, subclause 14. Internal audit system. Auditor verifies whether internal audit exists, whether reports considered. Clause 3, 19. Company's ability to meet liabilities for next 1 year. This links with SA 570. Then final clause, CSR. Okay. This is clause 3, subclause 20. Compliance with CSR provisions under Section 130 of the Companies Act 2013. Auditor reports if unspent CSR transferred to special account, utilization as record or not. For memory trick of CARO, how to remember the clauses. Remember ALISFINC, Alice Fink. A stands for assets, L stands for loans, I for investments, S stands for statutory dues, F for fraud, and I for internal audit, N for Nidhi, and C for CSR. CARO 2020 requires auditor to report on 21 specified matters relating to assets, loans, statutory dues, fraud, internal controls, and CSR. It enhances transparency and provides stakeholders with detailed financial information. As a student, remember one thing in audit paper, CARO is not a theory, it is a reporting weapon. If you know how to apply the clauses in the practical situation, it is very easy for you. Now we are understanding the logic behind CARO. Step 1, why CARO exists. CARO is issued under section 14311 of the Companies Act. Government felt that standard audit report is not enough. Stakeholders need deeper reporting on sensitive areas. So CARO forces the auditor to comment on fixed assets, loans, defaults, fraud, statutory dues, related party transactions, internal audit, cash losses, and more. It increases overall transparency and applicability. Okay. We will not just learn them or memorize them. We just know how we have already grouped them into 6 logical groups, and accordingly we will just study them in such a form so that whether they come, which clause is affected, we can come to know, and likewise we will apply it to our answers, right? So what happens when we understand where it is falling, under which clause it is falling, it will be easy for us. So if any question comes for company, for example, ICAI will not ask you write clause 3.9. Okay, they will give you a case like company defaulted in repayment of term loans for 120 days and ask how will the auditor report under CARO. Your answer format should be in this way. Mention clause number first, then state the provision briefly, apply it to the given case, and give reporting conclusions. Always end with, accordingly, the auditor is required to report under clause 3.9 of CARO 2020. This will give you more marks. Okay. So step for high risk clauses, we have to understand clause 3.1, title deeds not in company's name. Clause 3, subclause 2, 10% inventory discrepancy. Clause 3, subclause 3, loan without repayment schedule. Clause 3, 7, GST unpaid more than 6 months. Clause 3, 9, defaults details, amount plus period. Clause 3, 9, 11, fraud reporting. These appear repeatedly in your exams. Now let's do some practical example. Let's take a situation. Company has rupees 8 crore working capital limit. Quarterly returns filed with bank do not match books. Now think like a student. This falls under clause 3, subclause 2. Auditor must report whether quarterly return statements are in agreement with books. If not, give details of discrepancies. Okay. Steps. Remember this golden rule. CARO is about reporting, not qualification, not opinion. Even if there is a default, you must report. Opinion modification happens under SA 705. That is a separate concept. Okay. So don't revise 21 clause randomly, revise like this. First, assets, loans, compliance, fraud, governance, visual grouping, and long-term return. This will just remember in your brain. So when you are doing CARO clauses are fixed. You don't have to think. You know, first you go by the clauses. Reporting format is structured. How you will report, just I told you now. Application based, which case it is applied, and presentation, how you present it. Okay. Now we will do some case based study questions from CARO, which will help us to understand the case more clearly under CAROs. Okay. So case 1. PPE records and physical verification clause under clause 3, subclause 1. Case ABC Limited maintains proper records of PPE, right? Physical verification was conducted once in 3 years. Certain machinery costing rupees 25 lakhs was not physically verified during that year. Title deeds of land are in the name of the company except one land purchased 5 years ago, still in director's name. Now the question is, how will the auditor report under CARO 2020? Okay. Under this will, for how you will write the answer, under clause 3, subclause 1, proper records maintained, report positively. If verification not reasonable, report inadequacy. Title deed not in company's name, mandatory detailed disclosure is required here. Description of property have to be given. gross carrying value you will give. In whose name held, period held, reason. Okay. In this form, if you give the answer, you will fetch marks. Okay. Now, case 2, inventory and working capital limits. Clause 3, subclause 2. Case, inventory physically verified, discrepancies of 12% noticed and adjusted. Company has rupees 8 crores working capital limit from bank based on stock statements. Quarterly details filed do not match books. Question is, what is auditor's reporting responsibility? Okay. Answer, how you will write, 10% discrepancy is there, must report. Working capital is more than 5 crores, compare quarterly details with books. If mismatch, report whether materially consistent. Okay. Now case 3, loans to related parties. Clause 3, subclause 3. Case, company granted unsecured loan to subsidiary, no repayment schedule fixed, interest not charged. Issue prejudicial to the company, repayment schedule, overdue, reporting. Auditor must report aggregate amount granted first, terms and conditions under which it is granted, whether schedule specified or not, whether overdue for more than 90 days or not. Okay. In this way, you will add your marks to the question. Loan repayable on demand, special reporting is required. Case 4, deemed deposits. Clause 3, subclause 5. Case, company accepted advances from customers for more than 2 years without supply of goods. Concept tested deemed deposits under Companies Act. Reporting if is this contravention, report nature of contravention. Case 5, statutory dues. Clause 3, subclause 7. GST of rupees 15 lakhs outstanding more than 6 months. Income tax deemed demand disputed before CIT appellate. Reporting format, undisputed dues more than 6 months, report amount and period. Disputed dues, table format, you have to give a nature, amount, forum and period for which it has been held. Case 6, default in repayment of loans. Clause 3, subclause 9. Case, company defaulted in repayment of term loan for 120 days. Report must include nature of borrowing, amount of default, period of default. Whether willful, defaulter declared. Case 7, fraud reporting. Clause 3, subclause 11. Case, internal audit detected employee fraud of rupees 18 lakhs. FIR not filed. Auditor responsibility, report nature and amount of fraud, whether reported under section 14312, whether whistleblower complaints considered. Okay. Case 8, Nidhi Company. Clause 312. Check. Net owned funds to deposits ratio 1:20. 10% unsecured unencumbered term deposits. Okay. Case 9, related party transactions. Clause 3, subclause 13. Check compliance with section 177 audit committee approval, section 188 board shareholders approval. If not complied, report details in under CARO. Case 10, internal audit. Clause 3, 14. Company auditor required to have internal audit but not appointed. Report under CARO. Whether system exists, whether reports considered by statutory auditor. Case 11, cash losses. Clause 3, 17. Company incurred cash losses in current and preceding year. Auditor must report amount in current year, amount in preceding year. Case 12, resignation of auditors. Clause 3, 18. Previous auditor resigned due to management disputes. Auditor must consider issues raised by predecessor. Okay. So based on these things, you have to write your answers. Clause 3.1, PPE and title deeds. Clause 3.2, inventory and working capital. Clause 3, loans. Clause 3.7, statutory dues. Clause 3.9, defaults. Clause 3.11, fraud. These are repeatedly coming in examinations. Okay. Now, if some MCQs come, okay, how will you write? So you have to report in conclusion should be clear and crisp. Okay. Accordingly, write the auditor is required to report under clause 3.9 of CARO 2020 that. Okay. Okay. Some MCQs will clear the doubt. If any doubts coming and how to answer the questions, you just to know how to answer the questions. See, title deed trap. Clause 3.1. Land purchased 6 years ago is registered in the name of the director. Company has possession and board resolution authorizing purchase. What should auditor do? A. No reporting required if possession exists. B. Report only if material. C. Report under clause 3.1 with prescribed details. D. Qualify audit opinion. The answer will be C, that is report under clause 3 subclause 1 with prescribed details. Even if possession exists, title deed not in company's name. So it is mandatory. CARO reporting in tabular format should be done. Number 2, inventory percentage confusion. Clause 3, subclause 2. Physical verification reveals 9% discrepancy in value of inventory. Auditor should, what should the auditor do? Clause part answer A. Report since any discrepancy must be reported. Report only if more than 5%. Not report since threshold is 10%. Modify opinion. Answer is C. What does it say? Not report since threshold is 10%. If it is more than 10% or 10%, then only you need to report under CARO, otherwise not required. So reporting required only if discrepancy is greater than equal to 10% in aggregate for each class of inventory. Question number 3. Working capital limit trick. Company has 4.8 crore working capital limit from bank secured against current assets. Quarterly returns do not match books. Report under clause 3, subclause 2. Yes. Do you have to report? B. No. C. Only if default exists. D. Only if inventory discrepancy is greater than 10%. The answer will be B. That is no, you don't have to report because clause applies only if working capital limit is more than rupees 5 crores. Okay. Question number 4. Loan repayable on demand. Clause 3, subclause 3. Company granted loan to subsidiary, repayable on demand. No schedule fixed, no amount overdue. Auditor should report A. Overdue amount, that no repayment schedule specified. Nothing since repayable on demand. Qualify opinion. Answer is B, that no repayment schedule is specified. Even repayable, answer is B, because even repayable on demand loans require specific reporting about repayment terms. Okay. Question number 5. 89 days default. Clause 3, subclause 3. Loan installment overdue for 89 days. Report overdue. A. Yes. B. No. C. Only if material. D. Report under fraud clause. It is answer B, that is no. Reporting is required only if overdue is greater than 90 days. In this case, 89. Question number 6. Statutory dues. Clause 3, subclause 6. What is this? GST unpaid for 5 months. Auditor should report since unpaid. Report if disputed. Not report under 3.7a. Modify opinion. Answer is C, that not report under 3.7a. Undisputed dues must be outstanding for more than 6 months. Okay. Remember this point. Then disputed income tax demand disputed before CIT appeal. Auditor must ignore since disputed. Report in table format. Modify opinion. Report under fraud clause. Answer will be report under table format. Okay. Disputed dues must always be disclosed in prescribed format. The format is in table format. So you have to do it because it is already disputed. Question number 8. Willful defaulter declaration. Clause 3, subclause 9. Bank declared company as willful defaulter during year. Auditor should modify opinion. Report under clause 3.9. Report under fraud clause. No reporting required. Answer will be B. That is report under clause 3, subclause 9. Because specific reporting required where the company declared willful default. Then we have fraud below materiality. Clause 3, subclause 11. Employee fraud of rupees 50,000 detected. Materiality for audit rupees is equal to 5 lakhs. Auditor should ignore since immaterial. Report only if reported under section 143.12. Report nature and amount under CARO. Modify opinion. The answer is C. It should be reported under, report the nature and amount under CARO. Because CARO fraud reporting not linked to audit materiality. Case number 10. Cash loss confusion. Clause 3, subclause 17. Company incurred accounting loss but positive cash flow. Reporting under cash loss clause. Yes. A. B. No. C. Only if loss is greater than materiality. Report under going concern. Answer is B, that you don't have to report because clause 3.17 refers to cash losses, not accounting losses. Always see that it is mentioned that it is specifically cash losses, not accounting losses. Question number 11. Internal audit system. Clause 3, 14. Company required to have internal audit but not appointed one. Auditor should modify opinion, report under CARO, report under SA 315 only, ignore. Answer is B, must report under CARO. Must report whether internal audit system exists and whether reports considerable. Question number 12, CSR, unspent amount, clause 320. Unspent CSR amount must not transfer to specified fund within specified time. Auditor should modify opinion, report under clause 320, report under statutory dues, ignore. The answer will be report under clause 320. So we understood that whatever the question comes under MCQ or case-based study, how will you answer the question? You have to first mention the clause under which it is coming. Then after that, you have to mention how it is linked to the particular clause. Okay. Always follow the four structure. Okay. Relevant clause number. First, you give that. Second, legal provisions in brief. Right. Application to the particular given case. And reporting conclusion clear and crisp. And always write accordingly. The auditor is required to report under clause 3(9), whatever clause is required of CARO 2020 that. So this will be the perfect way of answering your question and you will score good marks. Thank you. I hope this topic is clear to you.